Welcome to Money Talks. I'm Genevieve Westcott with your latest financial news from across New Zealand and around the globe. Coming up, on the eve of his so-called zero budget, Prime Minister John Key warns the euro crisis threatens to delay the government coffer's return to surplus. Agricultural markets around the world continue to be buffeted by the Greek dilemma and the fear of contagion. We're no exception here at home. And Fonterra revives down its 2011-12 forecast payout as global dairy products fall for the third straight sale in Fonterra's recent global auction, hitting a new three-year low as China's slowdown and Eurozone uncertainty weighs on commodities. We kick off with a rural roundup of the sectors, the markets, and those all-important commodity prices. And Fonterra's forecast payout for 2011-12 and 2012-13, announced Tuesday, is somber news. The dairy co-ops revised down its 2011-12 forecast payout range before retentions by 30 cents to $6.45 to $6.55. It puts its 2012-13 opening forecast payout range before retentions of $5.95 to $6.05. Fonterra fair value share price for 2012-13 held at $4.52. Who better to talk those numbers than National Manager of Agribusiness for BNZ Partners, John Janssen. John, great to have you on the show. What do those numbers from Fonterra say to you?
Look, the revised down 11-12 forecast, probably a little more than we were expecting, 30 cents. But certainly the forecast for 12-13 year, probably in line with expectations, given what has happened with the global dairy trade, etc. Probably the important thing there is there's actually a big difference between the cash farmers will receive from 11-12 into 12-13. So in 11-12, they received around $6.90 of cash, and that was in large part due to the strong deferreds from the previous season. And whereas in the 12-13 season, it looks like more $5.55 with the current forecasts and payout schedules that Fonterra have in place.
On average, though, it could cost the dairy farmer $42,000 per farm. Is that what you're hearing? $500 million to the economy. That's a lot of dosh.
Yeah, it is. But it all comes down to that cyclical factor. Last year we had a great productive season with regard to weather, and we had a great payout season. This year, the payout's not as good, and we'll see what happens with the weather. That's just farming. Let's
look at number of livestock now. I see that our dairy numbers continue to go up and up and up. Sheep numbers coming down.
That's right. I think there's 650,000 less lambs killed this year to date compared to last year, and it looks like the breeding flock's about the same, going to be about the same going into next year. That really supports the fundamentals of the lamb and sheep meat and wool industries. That's the good news story there. So despite demand being a bit off in Europe in those sectors, and the problems in Europe, which are well documented, the lack of supply from not only New Zealand but Australia, other parts of the world, will ensure that those industries are pretty well supported.
John, we now have more than 6 million cattle in New Zealand. How many more do you think realistically we can support in this country?
Look, there's certainly significant more land down in South Island in particular, with some of these irrigation schemes that are coming on board over the next few years. And they're looking at some in the North Island as well, in the Hawke's Bay. Irrigation, the highest best use of irrigated land is dairy farming. So there's certainly a potential to increase that flock further, and also through further intensification on existing farms.
Can we talk a little bit about sheep prices? Apparently the prices are picked to strengthen. Is that your take on it?
Yeah, absolutely. In the lamb meat, I think it's down to $5.60 a kilo at the moment from $8.20 earlier in the season. There's a bit of conjecture about why that is, but certainly winter lamb contracts are out, and they're looking back about 50 to 75 cents per kilo on previous season, and but certainly a bit stronger than say the dairy price, for example.
And how's our wool market doing, John?
Well, in the coarse wool, that market's sort of gone up and come back down again. The theory of what happened there is that there was a lack of supply early on. China, a lot of demand out of there, they took it all. Supplies sort of built back up, and now the prices dropped back. So, whereas in the fine wool, that's more of a consistent sort of stable story.
Of course, there's talk now about a wool levy, and I was just interested, what do you think about that? Do you think that's a good idea to return to a wool levy?
Look, we've tried various iterations in the wool industry in the past. Is research and development and marketing important? Yes, it is. How the industry goes about doing that most efficiently is up to the industry.
Any good news for oil prices? I know for most of us here at home it's come down a little bit. What's that going to mean for farmers?
Well, look, oil's a key input price for farming. If you look at all the range of product, not only the actual oil, but things like urea, price contracting, all these things are linked to and into the oil price. So a falling oil price is certainly good for global agriculture. But of course, with the dollar coming off, that's going to temper any lower prices at the pump for some time, I'd say.
Thanks, John. Coming up after the break, New Zealand is ranked the 4th safest economy for investment in the Asia-Pacific region. And what's John Key's zero budget going to mean for agribusiness? But first, answer this in our Farmers' Facts and Figures quiz. How much have global dairy prices tumbled so far this year? The answer when we return. Stay with us. Welcome back to Money Talks. Just before the break, we asked you, how much have global dairy prices tumbled so far this year? They're down 24% so far and at their lowest level in 2.5 years. In 2012, there have only been 2 rises out of the 10 auctions. Sobering stuff. Welcome back to Money Talks. With us, John Janssen of the Bank of New Zealand. And joining the talk team now, the editor of the National Business Review, Nevil Gibson. And Greece is still the word. Are they going to stay in the Eurozone, Nevil? What are you hearing?
Well, I don't know. 50-50. It's like a television soap opera, isn't it? Grexit is a good name for it.
Greg said yes. We talked about that last week.
And you could recycle the scripts.
You could.
They have another election this time. Well, actually, the polls are showing that the Conservative Party could do a bit better, so maybe some of the sensible Greek voters will go that way. But there's a very charismatic guy on the left, and he could really sort of follow Francois Hollande and push the left-wing solution to the problem.
But here's the question. Is Angela Merkel going to buckle and do a deal, some kind of deal with Greece?
Well, we don't know about that, but I don't think she will, because, you know, the Germans are sitting pretty tight on that, and so are their voters, and she faces some elections soon.
Yeah, and you hear that they're already reprinting drachmas over in Greece. Tell me more.
Well, that was a report from England that people who print banknotes have already got it all up and running. But if you were going to exit, you have to do it over the weekend. You freeze all the euros, stamp them, close the banks down. It can be done. In fact, they ran an essay competition among the brainy people of Europe, and they've been developing those plans.
Now,
but that's Plan B.
That's Plan B.
And they won't admit there is a Plan B.
Yeah.
In Brussels.
There's got to be. Isn't it all about compromise?
Yeah. The German newspapers are full of the Plan B plans.
Okay, meantime, over in Washington, D.C. Lately, we've had the G8 leaders meeting at a summit. And, John, it seems that they can't agree whether or not Angela Merkel and the boys and girls in Europe should go for austerity or growth. What do you think?
Well, it's hard to say. I mean, we've tried, various parts of the world have tried different measures, and they all seem to be varying levels of success. Certainly, you've got the political backlash issues with severe austerity. Here in New Zealand, we're riding that fine line between austerity and, you know, not crimping growth and keeping the political aspects in line. So the answer is, what would be 2 or 3 years into the GFC? They've tried a lot of things, varying levels of success. Who knows? I don't think they do.
We have the zero budget coming up tomorrow on Thursday. What are you picking it's going to mean, first of all, for the agribusiness sector of New Zealand?
Look, agri's done reasonably well in previous budgets under the national government. Primary Growth Fund last time, and the money towards irrigation projects. So certainly we're expecting a continuation of a relatively moderate view on agriculture being one of our country's leading industries.
Nevil, what are you picking for the budget on Thursday?
Well, we've got a team of experts from Grant Thornton working with us, and they've come up with a couple of hot scoops.
Scoops? Tell me more.
One is the capital gains tax, or an extension of it. I think if you're focusing on the farming community, they've had their best years for a long time. So talking higher taxes and capital gains is probably a best time to introduce a few more measures. Let's face it, we've got a creeping CGT anyway, so I think that we're going to be quite a bit on that score. The other is also about tax revenue. It's the reforming the inland revenue. It's a very old and bureaucratic department. They've got a lot of laws there about privacy, don't allow very much IT, but there's going to be some moves there where you can access your account and that sort of thing, and that'll speed up the way they collect their money, be much cheaper and more efficient, and possibly they may even look at collecting ACC and customs and other revenue from other departments, and so you get a super ministry of revenue. Capital
gains tax, perhaps for farmers. What do you think the reaction will be, Mr. Janssen?
Clearly, New Zealand farmers are reasonably probably not that happy with increased capital gains tax or capital gains tax. I imagine it wouldn't be a full capital gains tax. It'll be some sort of strengthening of existing measures, you know, around buying land on speculation, things like that. Certainly capital gains tax isn't a popular thing amongst farmers.
They've already been tightened up in a number of areas in property, and Grant Thornton are picking that ownership of shares will be one where they'll share trading will be extended so that if you sell within a certain period, you're going to be up for it.
In these tough economic times, I mean, what's stopping the government from making them sweeping right across the board like so many other developed countries? What are they waiting for?
It could be that this is the week for the big, bold exercise in a budget, because everyone's been told it's a zero budget. You see, so people say, oh, there's not going to be much in it, but it could be quite radical.
John Key, of course, is still saying that he can't guarantee really what's going to happen with the economy, all because of Greece. Do you buy that?
Well, it certainly has a big impact all around the world, and it is in world share markets and that sort of thing. It's certainly done good things for our currency if you want a lower dollar. But no one knows how that's going to pan out. But the OECD came out overnight with some new growth, or maybe not even growth projections, actually, lower growth in the Eurozone.
Yeah, and here's the question. Everybody will be watching to see how the Treasury forecasts do. We're saying now quite openly that they've been way too optimistic, as has Bill English and John Key. How correct do you think the Treasury has been in forecasting the kind of growth we can realistically expect, John?
Yeah, I mean, look, any forecast, when we look at a lot of businesses, most of the forecasts the last couple of years you can screw up and throw in the bin. So have they done that well? They've probably done as well as anybody. It's been a ridiculously volatile global economy over the last 2 or 3 years. That is making forecasts, picking a number same as the rest of us.
One thing that nobody wants to grapple with is at what age we can claim the pension. Everybody agrees it's got to go up at some point, and yet still John Key will not grasp that nettle. How long can we afford to wait?
Look, people of my age, I think, are realistic that we're not going to receive any form of government support. So I think it's clearly at some point in the next 30 years odd, they'll have to address that issue. Whether it's right to be addressed now, John Key's saying no, Labour Party's saying yes. It's a political point of view as much as anything else.
Do you think most younger people like John realize that there may very well be no money in the kitty? And do you think they're going to accept that?
Oh, it's going to get worse because of the demographic bulge. The first baby boomers, and I'm one of them, have started to come on that gravy train. And it's going to pick up and get quicker
exponentially over the next 3 years.
And we are out of step with a lot of other countries which have already introduced it. But you know, it's a matter of picking the voters' timing of it, I think, for him to make an announcement. But he's made some bold moves in the past, and you know, like the asset sales was put to the electorate, and they said yes, we need the money. We can forego all those, take all the dividends up front. You can, of course, go and buy them back if you want, and they don't work out for the new owners, and people don't realise that. And the pressure's going on local government. That really, I think that's going to be, could be another feature of the budget. The pressure to keep rates down is a realistic one, where the government, if it can keep its spending within the rate of inflation, why can't local government?
Well, local government has no intention of doing that. They say they need the money desperately, and a lot of people say it's because they've been poor economic managers themselves, and they're just squeezing people like you and me. At some point, the public's going to rise up, aren't they, and say we're mad as hell and we're not going to take it anymore.
I mean, this is the line that the government needs to walk, isn't it? That between trying to keep the global markets happy and with the zero budget sort of stuff, and keeping a return to surplus in a reasonable time frame, and keeping the public happy through not too many austerity measures. They've probably done a reasonable job of that so far when you look at some of the European countries.
I wanted to get your take on another report that's come out from Rabo Direct, saying that we apparently have the 4th safest economy for investment in the Asia Pacific. We're ahead of Hong Kong and Singapore. Should we be celebrating?
Oh, definitely, and it's always been the case that we have a very open economy. We have a very good judicial system when it comes to commerce. We're even higher in the World Bank's doing business rankings. In fact, we're #1 equal with Singapore. I'm surprised we're 4th, actually.
Australia is leading the pack. What do you make of that?
Well, they've got the mining industry and they need capital for that, and it's mainly dominated by global companies, and two of them happen to be Australian controlled anyway, so yeah, and the Chinese and others want to get in there, so they need investment. So you've got to lock that down and make sure that they, and that doesn't affect most people, what goes on in Australia. Whereas here you might feel a bit more sensitive about land, for example, being owned by overseas interests.
Meantime, I was intrigued to see that the government is expecting to pay contractors about $120 million to help sell its message to the public of flogging off state assets. Do you want to spend $120 million worth of taxpayer dollars on something like that?
Look, I mean, it's a commercial transaction. There's a lot of legal costs and marketing and things like this to pay for. Like in the commercial world and the banking world.
But this is all about PR, really. I mean, they're still trying to sell the message, and John Key has said all along, we voted for it, so why are they wasting that money?
I guess he's kind of trying to remind people of why they voted for it and that it's still a good idea.
Well, we shall see tomorrow when the budget comes out. Thanks, gentlemen. Coming up after the break, future-proof on the highways and byways of the economic world, as our experts point out what's coming up. But first, the number of New Zealanders putting money aside for a rainy day has jumped in the past 2 years, according to a recent survey by Rabo Direct. So answer this in our Farmers Facts and Figures quiz. What percentage of Kiwis now have some cash savings compared to 2010? The answer when we return. Stay tuned. Welcome back to Money Talks. Just before the break, we asked you what percentage of Kiwis now have some cash savings compared to 2010. 73% of New Zealanders compared to just 47% 2 years ago. But believe it or not, 69% of Kiwi savers said they couldn't be bothered shopping around for the best interest rates. You've got to be kidding, right? And now it's time for Future Proof. What's coming up for our experts? Nevil, Trans-Pacific Partnership. You've got your giant brain wrapped around that.
Well, I think we've got a number of contributors to the NBR who've actually taken issue with...
Another plug for your publication, NBR. Notice how many times he says that, John. Anyways, go on.
Resulting from these lawyers' letter and that sort of thing, because the TPP thing is being carried out in secret. No one really knows what's going on. But we've raised the issue that... you know, if you want to see what the Americans are really pushing for, and basically this group of lawyers and others are anti-American, there's no question about that, is to look at the detail of the Korean deal, which is not much different in the way that companies can sue governments than our existing one with China, you see. So there's not that much of a difference really there. So a lot of this is a lot of fire being caused outside the negotiating room. When you've got up to 12 parties negotiating almost one-on-one with each other, you've got a lot of permutations. Yeah,
it's pretty messy, and at the end of the day, particularly when it comes to our agricultural commodities, are we realistically going to be able to do a deal that's going to keep us happy and our new trading partners?
Well, that's the tough one, because you've got countries like Canada, which are highly protective of their system.
So subsidised.
Saying that we're very, very pro free trade, which they are in many ways, apart from...
As long as it works for them.
Yeah, exactly.
And the United States as well.
Oh, everyone. Well, I mean, everyone. I mean, we say we've got to protect Pharmac and a few of those sort of things. But again, that's like the .com case, you know, that's stealing American drug companies' IP. We want to get it on the cheap, you see. So we've got things to...
Okay, so TPP continues to obsess you.
I think it's a better thing than worrying about the Greek crisis.
Do you?
Yeah,
okay.
Far more interesting. Big returns for New Zealand, ultimately.
Okay, all right, good to know. John, we have National Field Days coming up, and I know BNZ always has quite a large presence there. What are you expecting out of this year's show?
Oh, it'll be interesting this year. The BNZ always has its very large tent. We get 2,000–3,000 people through there. We profile a number of our clients within the tent, so you get to see what's made them successful, those New Zealand businesses. Look, with the payout dropping back, it'd be interesting to see what the spending's like.
Yeah, I suspect the spending's going to be reined in a bit, although they said that last year as well.
They did say that last year. I mean, there's a normal cycle of gear depreciation and things like this that need to be replaced, so there's always a base level of spending. And of course, you've had the sheep and beef sectors, which have been going pretty well for a number of years now, and they've got still catching up on capital expenditure there.
So you're anticipating it could be a good turnout and there could be some wallets loosened.
I think weather permitting, it'll be a really good turnout. Yeah.
Okay, and you also, BNZ also has some big Maori farming awards coming up. Tell me about that.
We do, the 8th of June, so it's the BNZ Ahu Whenua Maori Farming Award. Alternates between dairy and sheep and beef. This year's the dairy competition. The final awards dinner's at Sky City on the 8th of June. And we're expecting around 500 people for that.
Yeah, and who are the front runners?
There's the 3 finalists. Tahara Moana from Taupo, Wharapi Whānau from Paengaroa, Welcome Bay, and Kapinga M Trust from Rotorua are the 3 finalists this year. Let's
talk a little bit, gentlemen, if we can, about the aquaculture sector, because historically it's not something that is really part of the agribusiness discussion as much as it probably should be. Do you think that's changing? Look at bluff oysters now, another 2 million added to the quota.
Oh, this is a really dynamic sector. It's dominated by 1 or 2 companies who've formed a partnership on research and that sort of thing. They've got guaranteed markets. I mean, it's just brilliant what they can do. Everything they produce can be sold. And aquaculture covers everything from shellfish through to salmon, which is probably our glamour export in that area.
And there's a heck of a fight going on in the Marlborough Sounds right now. King Salmon wants to expand its farms, of course. A lot of environmentalists saying no, that should be left for the people. What's your view on that?
Oh, well, I think this is a very well-run company. That while it's Malaysian-controlled, they've got markets. They're doing very well. They've got a huge publicity machine going. They employed a lot of people. So I can't see anything wrong with it myself.
BNZ, of course, taking more interest, would that be fair to say, John, in the whole aquaculture sector? What are you seeing that's exciting you?
Yeah, look, we're a relatively large lender into that sector, and we certainly see a growth path for them, especially around the lifting of the moratorium on aquaculture farm additions. And so we're excited about getting involved in that sector over the next 5 to 10 years.
Do we rely way too much on dairy in this country?
Oh, look, it's like any business, it's important to have a diversified revenue base, and we do have a heavy reliance on dairy farming, and the more we can do to add to those revenue flows for the country, the better.
If you could pull something out of the budget tomorrow that you think would work really well for the rural sector, what would it be?
Look, you've got to invest in R&D. And it's expensive.
Research and development.
Yeah, it costs a lot of money, and you spend $10 to maybe make one. Further down the track, it's expensive. You got to spend a lot of money, but you just got to do it. So additional funding into that area, and also into if anything we can do around getting more students to study agriculture at university. I've been doing grad recruitment. We get 80 or 90 rural graduates to apply for our jobs. That's it. That's all there are for what's the leading industry in New Zealand. So. Anything that could be done around education, especially in the rural sector, would welcome.
Interesting, not finding enough young people stepping up to the plate. The same thing in the aquaculture sector, and let's talk about the foreign fishing vessels. In 4 years' time, they're not going to be allowed in New Zealand. But I heard a seafood company representative this morning talking about how they just can't find young people here that want to do those jobs. Whose fault is that, the government or the industry?
Well, a bit like the dairy industry from a few years ago, it's the fault of probably the industry, has to take the blame. People don't want to work in that industry. And if you look at what the dairy industry did around advertising and improving conditions in that industry, and they've certainly had a good result out of that. So I think predominantly with the industry. Yeah.
What about you, Nevil? If you could have John Key's ear tonight and it wasn't too late, what would you want to see in the budget that isn't going to be there tomorrow?
What's not going to be in the budget? Oh,
that's nothing.
That's
the cupboards are bare.
Well, yeah, I suppose the business community will have plenty to say about what they aren't getting. But of course, when you've got a zero budget, it's a bit hard to, you can move money around. But I certainly agree with research and development, that kind of thing. I think overseas promotion. The move in fishing is really good because it shows that governments can in fact go out and do something quite radical that might upset a lot of countries overseas. But this is one way of actually seizing back our farm. And that's a brilliant move, I think, which has widespread public support. But let's back it up with ways that those companies can recruit the labour and that sort of thing if it's seen as highly dangerous or unsafe or whatever it is. But the tally company, of course, they are not involved in using foreign labour. So here's a company that was being picked on by the meat workers union is actually doing a very good job in the fishing industry.
Yeah, and now the meat workers dispute seems to be resolved. Hallelujah. It only took, what, 3 months?
And all night.
And all night, yeah. They just wanted to go home at the end of the day. Yeah.
Well, something had to give somewhere.
Gentlemen, thank you so much. I really appreciate your time. Thanks to my guests, Nevil Gibson and John Janssen. Be sure to check out our website at country99tv.co.nz for the latest updates on rural developments here and abroad. Meantime, on this day, 183 years ago, a young Viennese inventor successfully patented the accordion. Just remember what muso Tom Waits said, "A gentleman is someone who can play the accordion, but doesn't." Keep the faith. See you next time.